U.S. stocks, not only the only ones getting a vote of confidence from investors today. Take a look at China. In fact, inflation falling for the month of September. Even exports were up nearly 10% for the month in China. Clearly positive news when so many have been sounding the alarms recently on that slowdown happening there. So is China really in the clear given the recent warnings by big multinationals and luxury retailers which blame China for their slowing sales? We've got the exclusive with the man many call the Indiana Jones of investing. That is Jim Rogers. Jim, good to see you again.
I'm delighted to be here.
Always great to have you.
The fact that a lot of people are negative on China makes me think maybe I should be buying China again.
Contrary indicator.
I was waiting for a big collapse, but maybe I should buy now.
So you're just back from Singapore, obviously.
Yes.
Tell me what's going on from your standpoint in terms of China. Are things slowing down?
Well, of course, China's been trying to cool off for 3 years. They've raised interest rates many times. They've been doing their best to kill inflation and kill property. I wish their central bank were running our central bank. We'd all be better off. They may be turning things around now. I wouldn't loosen up if I were China, but I'm not China.
Don't loosen up. Okay, so in other words, but you're not. Are you investing in China right now?
No.
Staying away.
Whenever China collapses, I buy. I've only bought China 3 times in the past 10 or 15 years. It hasn't collapsed yet.
You're short a handful of equities in the U.S., and you're not going to touch equities in the U.S. Is that right?
Not with my money. No, not even with your money.
Why?
Because, I mean, next year, in 2013, 2014, we're going to have economic problems. We always have, Maria, every 4 to 6 years since the beginning of the Republic. Next year, we're going to have problems again. Either they're going to raise taxes or they're going to bungle something. So I wouldn't want to buy shares in the U.S.
But we all know that this market is rallying on QE and on central bank easing and all this free money. So why should I get ahead of that train that is really powering forward?
Ahead of it. It's been going on for 3 years now. We had QE1, QE2, QE3. None of them solved the problems of the economy. They solved the problems of the New York Stock Exchange. But that's not the economy, and eventually the people are going to say, well, wait a minute, this can't go on forever, because it cannot go on forever.
Did you say you were short Microsoft?
I am short. I'm short Microsoft calls, yes.
Why?
Why not? Why not? I mean, what has Microsoft got to do for the world? Microsoft was a spectacular company 30 years ago, 20 years ago. But this is 2013, 2014.
Yeah.
What is Microsoft doing for us these days?
So is there someone benefiting from the weakness that you see in Microsoft? Is there a technology company that you would put some money in right now or no?
Technology has been one of the few places that are very exploited. Even Apple. I've shorted an ETF that's got Apple in it. Mm-hmm. Do I know what I'm doing? Probably not, but we'll find out.
Yeah, right. That's why you keep being right time after time when we talk with you. All right, let's talk about the issues in the U.S. You say we're going to have economic problems next year. We've got economic problems right now with this fiscal cliff.
I know.
Talk to us about the fiscal cliff. You think this is going to be a worse fallout from the fiscal cliff than we saw in 2008? That is a big statement.
Whenever you raise taxes, it's bad for the economy. I mean, Mr. Reagan cut taxes and things were good. Mr. Kennedy cut taxes and things were good. Raising taxes has never made an economy grow. What is this? This is simple stuff.
And, the president's talking about, that he's cut taxes for small business. In fact, when we go off that fiscal cliff and taxes go higher, small business gets affected. They're facing the highest tax increase since World War II because they pay the ordinary income tax rate.
Yes, and then there's Obamacare. That raises their special taxes for Obamacare, even if they don't have these other Bush tax increases. We've got Obama tax increases. There are all sorts of taxes coming. Does
anything loosen up after the election? I mean, hypothetically speaking, let's say the president wins. Let's say Romney wins. What's the difference in terms of loosening up?
If you're Mr. Romney's friends, you're going to do well after 2012. If you're Mr. Obama's friends, you're going to do well. But you and I, the people watching this show, no. Debt's going higher. Taxes are going higher. This is not going to be fun unless you're Mr. Obama's friends or Mr. Romney's friends.
Unbelievable. What does that mean, Mr. Obama's friend or Mr. Romney's friend?
I don't know who they are. I'm not one. I assure you I'm not a friend of Mr. Obama or Mr. Romney.
All right. So in terms of other asset classes, commodities, we've seen iron ore get crushed because of what's happening in China. Where are the opportunities in commodities right now?
The reason iron ore has been crushed is because there was all these people started rushing in and adding capacity in the iron ore business. I don't really pay much attention to iron ore because they're not futures. I only get involved with commodities that have futures. But iron ore got, like anything else, they all built mines at the same time, so iron ore went down in price. It's not because of, it's partly because of China, but it's mainly because of too much capacity.
Do you see any value in commodities right now?
Maria, how
I know
many
you've always
times,
been an agricultural
how many
guy.
times have I
Give
told
up
you to
the
become a
Mercedes
farmer?
and get a farming
farmer.
thing. Yeah.
Lamborghini started out making tractors. Get yourself a Lamborghini, and you can learn to drive a Lamborghini tractor as well.
Tractor. So agriculture is a place to put my money. What about oil? Look where oil is right now. What the heck happened there?
Well, I'm not buying any commodities. If I had to buy commodities now, I would buy agricultural commodities. But I'm just watching because the world economy is going to be bad. I'm short stocks and I'm long commodities and I'm long currencies. Will that be right? I don't know. You can ask me in 3 years.
I just got back from Japan. The whole talk was about the issues between Japan and China right now. Do you worry that the South Sea, the Asian South Sea, is going to be impacted, the navigational export positive of that waterway?
Maria, I worry about everything, especially when politicians are concerned. These two little islands are so insignificant that we shouldn't even be talking about them.
Right. But
it could lead to war.
Yeah, exactly.
So we have to talk about it. Of course I worry about that. I'm looking for places to invest. Maybe China, as we just pointed out. Maybe Japan. These are markets that are down. Russia. I'd rather invest in Russia, though, if I could find a good way to do so.
What do you want to invest in Russia? A lot of people wonder if Russia's a place given Putin's policies. I mean, you've got different policies that you put in.
I know, and Russia's been a disaster. I've been negative on Russia since 1917.
And you're turning. This is a big deal.
I first went to Russia in 1966. I've been totally negative ever since. But Mr. Putin seems to be changing his tune, maybe because he's worried about history. For whatever reason, I'm convinced that things are changing in Russia for the first time in my life.
So you've got an advisor position with Russia's VTB Bank on an agricultural fund.
Yeah, but that means nothing. That means absolutely nothing.
Why VTB Bank?
Well, the reason I did it was because I'm convinced that things are changing in Russia. That's why I said I would do it with these guys, but now I'm looking for investments in Russia, in the stock market, or the currency. Maybe I would buy the ruble. I'm looking for investments in Russia. If you know any, don't blurt them out on this TV show. Don't tell them. Tell me. Call me first.
So let me get your take on India. I want to know what you're thinking, because when I was in Japan this weekend, there was a lot of talk about this domestic demand. 11 to 12 million people joining the workforce every year in India. This is what Chanda Kokar told me from ICICI, which we're going to run that interview tomorrow.
I'm short India.
You short India?
Short Indian stocks. Why? It's a disaster. I mean, massive inflation, massive balance of trade problems. It's a debt to GDP ratio of over 90%. The only people who are bullish on India, people who haven't been to India or haven't tried to drive across India. I wouldn't put I'm short India. I'll leave it at that.
Well, Chanda Kokar is the CEO of the second largest bank in India, ICICI. She's talking about all this domestic demand in India.
Well, he's obviously smarter than I am. He's long India. He's long India and I'm short.
All right, now back to the Federal Reserve. I know how you feel about the Fed, but Jem, can you really get in front of the Feds, what they've been doing for the stock market, pushing so much money into the market?
Well, it certainly hasn't done me any good, has it? Because stocks are up. You're exactly right about that. But is the economy up? No. Now, granted, the stock market looks ahead. But when I look ahead, I don't see good things out there. All I see is all this money sloshing around, and it's coming here. Yeah. Coming to the New York Stock Exchange.
Are you expecting a sizable decline? I mean, you're short some U.S. stocks, so how significant might a decline be in your view?
I would expect that we would see serious problems by 2014. You should be worried. I'm worried. You should be worried, too.
What am I worried about?
You should be worried that all of this money printing is going to come to an end. All of this government spending. Mr. Obama is spending a lot of... You know that employment is going up in Ohio. You know why? Because he's spending a lot of money in Ohio. He's spending money where he has to win. You think that's going to continue in 2013 and 14?
Were you surprised at those unemployment numbers? I mean, 7.8%, down from 8%. 8.1%.
Maria, I know you have to report stuff like that, but I don't pay much attention because I know first of all, the numbers...
Think they were manipulated?
First of all, the numbers always look back. The market's looking forward. Second of all, they're always revised. So by the time the revised numbers comes out, who cares anymore except CNBC? I don't care anymore.
Oh, Jim, you're the best. Good to have you on the program.
It's my pleasure.
Always wonderful to talk with you. Jim Rogers, Rogers Holdings Chairman here with me on the floor.